Good afternoon, ladies and gentlemen. Welcome to the Intelligent Ultrasound Group PLC interim results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just simply type in your questions at any time and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll. If you give that your kind attention, I'm sure the company would be most grateful. I'd now like to hand over to Stuart Gall, CEO. Good afternoon.
Thank you, and welcome to Intelligent Ultrasound's 2023 interim results. I'll take you through the first part of the presentation, and then Helen Jones, our CFO, will take you through the numbers in more detail. So if we just start, really, for people that don't know who we are an ultrasound software company. We are all about making ultrasound, which is the world's fastest, safest and cheapest imaging modality, easier to learn and simpler to use. And we do that in two ways. One, we build a range of ultra-realistic simulators that lead the world in high fidelity ultrasound training. And then we follow the clinicians into the scanning room to give them AI-driven tools that enable them to scan their patients faster and better. And ultimately, we hope that we'll be at the forefront of using the same software tools to enable ultrasound scanning in primary care, and ultimately at home to enable ultrasound for everyone. So an overview of the year. We had a positive start to 2023. Revenue was up 3% to 6.1 million. However, as we flagged last year, 1.4 million of that in H1 2022 was actually a one-off order from Health Education England. And so if you look at our revenue on a like-for-like basis, it was actually up 35%. So some key takeaways from that. I think importantly, the AI-related software revenue was up 145% to 0.7 million from 0.3 million last year. US, very important market for us, and we were able to grow revenues by 154% to 2.7 million from 1.1. And then also in the rest of the world, after a couple of difficult years, we saw revenues doubling to 1.1 million. And I'll talk more about those three things later. Now, I will touch on a few negatives from the period. In the UK, as I've said, after a couple of fantastic years, sales were down 40% to 1.6 million on a like-for-like basis, which I'll explain later. And cash at period end of 3.3 million was impacted by working capital. Helen's going to go through that in more detail to explain why that is, but cash utilization in H2 will be materially lower. So we have a unique classroom to clinic vision. This is enabling us to exploit multiple global markets through direct sales, resellers, and OEM royalties. And it broadly splits into two areas. You have the classroom simulation side, which we have 4 products in there. And this is a market that's estimated to be worth about 200 million by 2026. And then as the doctors and clinicians move into the clinic, we have clinical AI software products that we sell, 3 of those currently. And this is a much bigger market. This is estimated to be worth about 1.3 billion by 2028. And I'll go into detail on both those divisions. So if we look first of all at clinical simulation revenue, this is all about training through ultra-realistic simulation. It's the foundation stone of the business. It's where we started. And as I've said, we had 4 products in the marketplace. On the top left-hand side, you can see Scan Trainer, first product that we brought out. This is in the area of obstetrics and gynecology. We launched in May a new endometriosis module for this product. This is all about keeping this product fresh so we can drive new sales where hospitals don't have our product, but also upgrade hospitals that already have our product. So important launch with the endometriosis in May. Same for HeartWorks. We've added eLearn modules there to do the same thing. BodyWorks, which is our third product. This is our POCUS product. So POCUS is point of care ultrasound. This is for scanning in emergency medicine, intensive care, critical care. And this has been one of the mainstays of our sales over the last few years. We're launching a 4.5 version of this, a new version that's going to upgrade it with new modules, etc. That is launching at the end of this month. And that, again, will also enable us to sell upgrades to existing customers, but also keep encouraging new sales to new customers. And then finally, our fourth product is BabyWorks. And we've added lines and lung to that in June as the market asked for. So those 4 products make up our sales in the simulation side, 5.3 million, just slightly down on last year. But clearly, if you take away the 1.4 million, you can see there's about a 27% growth. And we are on target for hitting Senkos's forecast in the marketplace, which is for just over 10 million. Now, if we look in a little bit more detail at that, you can see the revenue by region. And I'd like to focus on this on the like-for-like basis. The UK revenue, as you can see, 2.6 million. We were down at 1.6 million in 2023. Now, the UK has had some really strong sales in the last couple of years and had some exceptional one-offs last year. So we also was combined with a very strong weighting. In H1 2022, we had the majority of our sales came in the first half of the year in the UK, which combined with this large one-off order meant we really had a very sort of abnormal seasonal spread. We're seeing a much more normal seasonal spread with our sales this year. So we do expect the UK simulation sales to close the gap on 2022 on a like-for-like full-year revenue figure of 3 million. Now, if we just turn to the US had really excellent trading period. It grew revenues by 154%. To 2.7 million. Now, we think there's a number of reasons for that. The product range is broader and has been sort of where we've looked to try to make it more relevant to the US marketplace, which does have some differences to the UK. But the biggest thing I think is the way we've been sort of selling the product and promoting the product. So we've got a bigger marketing team, and that's leading to a much greater degree of lead generation coming into the business for the US. We've also slightly changed our sales team, and we now have inside sales who basically take those leads, turn them into opportunities, and then have sonographer who basically then demonstrates on a web basis. So we do live web-based demos into hospitals, and that's given this ability to turn around demos quicker. If you look at America, it's got huge distances where we're covering it with 5 people, and then you've got organized demonstrations, ship expensive kit into them, and actually having a much more sophisticated web-based demo facility run by a sonographer to do the initial demonstration, I think is definitely helping us in terms of trying to push through sales quicker in the US, and we've grown them to 2.7 million. So encouraged by what's going on, and obviously the aim now is to keep that growth going. The final region is the rest of the world, where the revenue's shown actually some recovery from a couple of poor trading years. I think the rest of the world, from our perspective, was hit hard by COVID, and we're starting to see that come back. But I think there's definite scope for improvement. We need to do more in France and Germany and China, and certainly that's what we're focused on, trying to grow those sales in those markets and keep this rest of the world growth going through this year and the next. So if we turn now to the clinical AI software side, I think this is the side that sort of has most excited people on a go-forward basis. It's a key component of our sort of 2025 vision. We have 3 products in this space. We have ScanNav Assist, which is all about women's healthcare. We have ScanNav Anatomy, which is about anesthesiology. And then we have Needle Trainer, which is about teaching you how to do needle-guided injections. And this is clearly the market that's 5 to 6 times bigger potentially than the simulation market. It's forecast to be 1.3 billion by 2028, and we want to be a player in that, generating revenue from these 3 products. As you can see, the revenue's grown from 300,000 to over 700,000, so that's good growth. Obviously, in the early days, obviously the numbers, the percentages are always high when you're growing for a relatively small number. But I think the important thing is that growth is happening. We're now moving out of that sort of very early commercial phase into now taking things forward and hopefully generating material revenues. We are just slightly up, I guess, slightly under target for where we wanted to be at the half year, but not far off. And actually fully, we do expect that we are going to be near the Senkos forecast for full year 2023, which would obviously be showing considerable growth over 2022. So how are we going to do that? Well, we've got 3 products. So the first product, which we have called ScanNav Assist, is basically that's our technology that's all aimed at women's healthcare. And we have signed in 2019, we signed a deal with GE Healthcare, and They have exclusive rights to our software in the women's healthcare space. They utilize this software on a product called Sonlist, and Sonlist is available on their Voluson range of machines. And it's the world's first fully integrated AI tool that basically recognizes the 21 views when you do a mid-trimester scan. So if anyone that's listening has been through a 20-week pregnancy, you'll know that, a full-term pregnancy, you know that at 20 weeks you do basically an abnormality scan. You're looking at 21 parts of the body to check everything's okay. And it's quite a stressful scan. It's quite difficult, takes about 30 plus minutes. And you've got to basically save all these images, and the images have got to conform to a protocol. And that protocol we have built into Sonlist. So Sonlist basically is able to, when the sonographer freezes the image, our software instantly tells you if what the image is that you're looking at, and does it meet the protocol. And so in this case, are you looking at a 4-chamber heart? Can you see the 4 chambers, the valves, the ventricle, and is it magnified correctly? If you've done that right, you get all the 4 categories get ticked green, and you can move on to the next image. So this happens through all the 21 images. It's aimed at basically standardizing scanning, enable you to scan faster, and really importantly, de-stressing the whole scanning process. Now, Voluson have 4 products in their range. We have launched on Swift, and importantly, last year launched on the Voluson Expert, their premium machine. We hope that they'll launch the product across the full range over the coming years, but now focused on basically growing the revenues from this product. We get paid a royalty. It's an optional extra on the machine. So when the hospitals purchase the machine, they hopefully tick the box that says they want our software, and we get paid a one-off royalty when that happens. And we're looking to grow those revenues now going forward. So the second pillar of our sales is going to be in the needling area. So we have 2 products in this space. We have, first of all, a needle trainer product. This is sort of an AI hybrid product. It basically simulates learning how to do needling, or simulates needling on a real person. So you can scan with real ultrasound on a volunteer, and you get to simulate putting a needle into the volunteer. But of course, no needle actually goes in. It's exactly the same as doing a needling injection, but it's all about, can you get the hand-to-eye coordination of using the ultrasound, getting the needle in the right plane, seeing that you've got the needle to the right target area, how long have you had the needle in the target area, and this is all simulated, but then you get the real-time AI highlighting the target areas for you. That's the first product, all about teaching how to do needling. And then we have Scan Nav Anatomy PMB. This is a clinical product, FDA approved and CE cleared for sale in the UK, EU and US. And this is about basically giving anaesthetists who do needle-guided anesthesia injections the confidence to do those injections in utilizing and working with the ultrasound. So the market told us that basically if you look at anaesthetists who are doing these injections, about 80% of the anaesthetists are basically competent but less confident with the ultrasound. So if you could give the market a tool that would enable those same anaesthetists to be confident with ultrasound, they thought there was a market for our product around the world. This product plugs in to your existing ultrasound machine. So when you're doing a local anesthesia operation, say on your hand or your leg, you can do a nerve block. It's needle guided. And our product, in effect, highlights the target areas. It shows where the nerves are. It shows where the arteries are that you need to avoid, where the muscle is, and enables you to get live, real-time feedback as you're scanning, showing you where the needle needs to be to do the injection. So this product, as I say, is launched in the marketplace at the end of last year. And we're now about basically building those sales, going out to the marketplace, giving them the evidence that supports why they should purchase it. So that's not just studies that show confidence levels, that show how it's helpful in identifying structures. It's also showing case studies of hospitals that have bought it, how they use it, studies that show independently in magazines like journals like the British Journal of Anaesthesia, why this is a product that actually is beneficial, not just from a scanning perspective or a confidence perspective, but also from an economics perspective. If you can do these local anesthesia injections rather than general anesthesia, you will save a hospital money, you'll save it time, you'll save it in beds. So this is where we're focused. We're starting to get traction in America, getting into our first few schools that have announced that they're taking our product and putting in those products. And we see this as being our second and third pillar of our AI sales as we build the revenue now 23, 24, 25. And this is all part of our 25 by 25 vision. I do want to stress it's a vision, it's aspirational, it's for illustrative purposes, it is not formal guidance, but that's where we hope we can build our sales to. And that is a combination of the established market, which is simulation products, and the new products of the AI software building up to a 25 million revenue, and us being profitable with our current cash. So I'm going to hand you over now to Helen, who's going to take you in more detail through the numbers. Oh, sorry. I would say that I was going to take Helen through that, but just a little glitch there. I forgot to say that actually here is our halfway report. So this is our halftime report on what we've done as the business. We set ourselves these targets for the beginning of the year. You can see as a group level, we're on target for revenue. We're on target for our adjusted EBITDA loss. We're under target on a minimum cash, but Helen's going to go through that. On the simulation side of the business, revenue's on target. The new products have either been launched or are about to be launched. From a clinical perspective, we're just slightly under target on the clinical AI, but still believe we'll catch up in the second half of the year. GE partnership progressing well, on target with the, well, actually we have launched Scandinav Anatomy PMB, so that should really be launched, not on target. And then Needle Trainer launched with GE vScan Air, that has also happened. And then in the background, we're working on the other products in the pipeline, and those are in progress. So now I will hand over to Helen, who will take you through the numbers in more detail.
Thank you, Stuart. So this just gives a summary of our financial KPIs for the first half of the 2023. So our total revenue, group revenue, was up 3% to 6.1 million. Our gross profit up 4% to 3.9 million. And that meant we had an improvement in our gross margin by 1% to 65%. With higher costs, however, our operating loss increased to 1.5 million, so an increase of 200,000. And after adding back our R&D tax credit, our loss after tax for the period was 1.2 million, so a £200,000 increase. And I'll go through that in a little bit more detail. So on the right-hand side, just in terms of our cash outflow for the period is 3.9 million. So, you know, compared to the 1.4 we had in the prior period, significantly higher. And I'll talk through the reasons for that later. That meant that we ended the period with 3.3 million of cash and cash equivalents from the starting point of 7.2 at the start of the year. So just in terms of our group revenue, this just shows our growth trajectory over the last 3 half periods, excluding the 1.4 million of exceptional orders we had in the UK last year. The like-for-like growth overall was 35%, split between the simulation revenue stream of 27%, and the clinical AI, importantly, 144%. This is in line with our target and in line with our expectations, and importantly is an indicator that we are on track for our full year 12.5 million target. So just looking at our income statement, our performance for the half year compared to last year, revenue up to 200,000, profit at 100,000. That meant that we had a gross margin improvement of 1%. That largely came from our simulation revenue stream with product and regional variances. And then we did have a slight negative variance on our clinical AI margin, which I'll talk about in a second. So just in terms of our cost base, we, like every business in the UK this year, have been impacted by inflation, a large part of that being salary. Over 60% of our costs are employee-related costs, and we saw average salary increases of 8% in the half year. On top of that, we've had higher planned marketing spend. Stuart mentioned earlier about investment in marketing, both in the UK and in the US. And we've seen then other just general inflationary impact across all our other G&A type costs. That was offset with lower R&D, external R&D costs, across both simulation and clinical. And then from a tax point of view, £300,000 credit for the first half of the year. On a non-rounded basis, that is lower as a result of the changes to the SME R&D tax credit regime that came into effect on 1st of April. And that will have a material impact for the full year by about 300,000 this year, impacting our cash next year. So just splitting into the two revenue streams, which Stuart's already talked through in terms of the regional performance. So really there just to focus on the gross margin, up 2% from the simulation, and that's down to the product variances. Our margin ranges from 60 to about 70% across all our product range. So with variances in how the product revenue is split, we've seen an improvement there of 2%. And then on the clinical, we had a reduction of 4%. And that is driven by the mix of the revenue between the 100% gross royalty margin we get, as well as the margin from our two products there. And that's gone down because of the way we bundled needle trainer with PMB, a slightly lower overall price compared to selling them separately, as well as hardware upgrades we've made to NT. So that's had a slight impact in terms of the gross margin there, but in line with what we expected, and to improve the product. So from a balance sheet point of view, our net assets have gone down 1.2 million, a large part of that being down to our cash burn in the period. We had much higher trade and other receivables of 2 million, and that's therefore resulted in that cash burn in the period of 3.9 million. So it's quite difficult to predict the profile of our revenue. And in this period, in 2023 compared to last year, we saw a much heavier weighting of our invoicing in the last 2 months of the period. So we did have very high trade receivables of 2.7 million at the end of June, largely arising from the US. On top of that, with timings of the receipts of our stock, where we place annual purchase orders and call off those against the year, that's just resulted in higher stock of 1.9 million. And we do expect both of those to reverse in the second half of the year. Therefore, the cash outflow will be significantly lower, as well as with the receipt of the £700,000 R&D tax credit, which we'll get in the second half as well. So I'll just hand back to Stuart to summarise and conclude the presentation.
Okay, thank you, Helen. So yeah, look, I think we remain in what we think is an exciting and dynamic market. We've really importantly got 3 clinical AI related products in the market, regulatory approved and gaining traction, moving out of that early stage of commercialization into sort of the material stage. You combine that with a strong simulation portfolio, and the key bit here again is that we've got an established sales network. So we have teams in the UK, in the US. We have a full warehousing and build facility in Caerphilly we can expand as needed. So the investment has gone into those. We're on target to meet the revenue expectations within the market, and that will include a material contribution from AI related sales. It's been a positive start to the year, and current cash remains anticipated to take the group to profitability. So that concludes the presentation, and we are now open for questions.
That's great. Thank you, Stuart and Helen, for updating investors this afternoon. Later on, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while Stuart and Helen just take a couple of moments to review your questions submitted already, I'd just like to remind you the recording of this presentation, along with a copy of the slides and the published Q&A, will be available on the Investor Meet Company platform. Stuart, Helen, you'll see you've had a number of questions from investors throughout the presentation. So firstly, thank you to everybody for your engagement. If I may just hand back to you just to read out the questions and give a response, and then I'll pick up from you at the end.
Okay. So the first question was pre-submitted. So this was, what is the potential growth rate for your AI side of the business? I think, but we've tried to give a vision of where we think it could be. So if one of the slides that we talked about explained that we have a vision of trying to get to 12.5 million of AI revenue by 2025. So clearly that's a considerable growth rate if we can achieve it. Even if we got close, it's still a good growth rate. So I think from where we are, this has the potential to grow considerably over the next 1, 2, 3, 4 years. Second question from Chris: who do you view as your main competitors given the size of the market? What would you say is your USP? Well, I think, actually, ironically, a lot of our competitors in the AI side of the business are the manufacturers themselves. But we're one of the first players in this space. So we are in the obstetrics and anesthesiology space. I think our USP is that we operate in the real-time environment. So this is not about post-processing. So, quite often in medical imaging, you can do all your AI software after the event, run your algorithms once the scan or whatever imaging has been done. With ultrasound, there's obviously a benefit to getting that feedback in real time while you're scanning the patient in real time. And that's, I say, where we've really focused our efforts. We're first to market in the obstetrics field with our product in the 20-week space. We're first to market in the field of plugging in a device that can give you real-time ultrasound guidance on doing local anesthesia blocks. And I think, that's what we want to exploit. That's why we've got to keep our foot pressed to the metal and now be selling and focusing on the commercial side of making this AI side of the business work. Next question. So do you manage sales internally? If so, how big is your sales force, or is this outsourced via a third party? And how do you ensure your offering is front of mind? So we do have our own sales force. So we have 3 people in the UK. We have 6 people in the US. And then we have about 23 resellers around the rest of the world. Clearly from managing internally, I think, we've got a head of sales, head of US operation who manages our US operation. We liaise very closely with Thomas on a regular basis. So we've got a close relationship there. And I think we're seeing the benefits of that relationship now. And then on the UK side, obviously that's much easier as part of the Cardiff-based team. We have a head of reseller sales, and he manages the 23 resellers. And I think that's, an area where we definitely think, we've got to try and work harder in some of the countries to ensure, as you say, that the offering does get front of mind. That's one of the difficulties sometimes overseas, is that you've got a reseller who might not necessarily be as focused on your products as you want. And we're continually trying to review how that works and what we can do to help that. Next question from David. As AI improves the usability and decreases operator skill, does this undermine the simulation business rationale? Well, I think, first of all, the products at the moment really aren't de-skilling. Ultrasound is still a skill. We're just helping you with the workflow. We're making it quicker. And I think really importantly, de-stressing it for you. So we're actually trying to help with this big area, which is burnout in scanning rooms. So as I see it at the moment, I don't see this undermining the simulation business. You've still got to learn all these skills. This is not going to do them for you. There may be certain skills that we can make easier at the lower end, but you'll still require a skill to do ultrasound. I see at the moment, I don't see this becoming something that is going to replace the human or de-skill it so much that you don't need to have any skill. And it's a bit like Star Trek, where you scan someone and you get an answer. I cannot see that happening. This is about augmenting the sonographer's skills and supporting them while they scan. The next question from Jonathan. There have been a handful of recent patent applications covering method and apparatus for, there's 3 applications that we've had: method of detecting potential abnormality, gestational age estimation and apparatus, and image processing methods. Can you address how you intend to use these and what are the likely time frame for adoptions? So yes, I think one of the areas that we have looked at is, traditionally we have protected ourselves by it's know-how. They're encrypted. It's not patented. We have been working on putting more applications in to try and have some more patents available in this space. So we would look to exploit these as much as we can. I think some are more obvious than others. So obviously gestational age clearly fits in women's health, for example, and has applications globally. And, time frame adoption is that we would be looking to try and develop these products in the relatively close future. So I think, we're not talking that we're going to be selling them in 2023, but we would be looking to where can we take advantage of these products over, maybe end of 24, 25. But there is no guarantee on those products. We've not got anything in the market about those products, but well spotted that we are putting applications into the marketplace for patents. And next question, another one from Jonathan. What do the prospects of an OEM distribution deal look like for ScanNav PMB? So at the moment, I think we are focused on selling this direct. And, but we continue to be open to any OEMs wanting to put this on their new machines. And really, that's all I can say at the moment about that. But the focus at the moment is generate revenue from the immediate product that is out in the market, regulatory approved, that we can sell or are selling now. Are GE Healthcare planning any Volison product enhancements or research-driven market support for 2H23 that might support the company's clinical AI revenue objective? Well, I think GE are always looking to do Volison product enhancements. That's absolutely sort of what they guarantee every year, and we hope to be a part of that. But there's nothing I'm actually allowed to say pre any launches about anything that we're doing with GE. So I would just say that, look, GE are a really good partner. We've worked well with them, and they're very supportive. And we both work together to see what is possible to bring out to the marketplace that enhances both their offering and obviously our potential sale of new products. And then the final question, can you comment on Caption Health and how dissimilar their business model was compared to yours? Were they at a similar level of development relative to IUG prior to their acquisition by GE Healthcare? They're sort of similar. I mean, obviously, the California-based business, they'd raised a lot more money than us. I think the important thing is they are in the same space. They are in ultrasound AI software. They were very much a cardiac-based business. Cardiac is one of the key big areas of ultrasound imaging, just as women's health and obstetrics and gynecology is a large area of ultrasound imaging. I'd say with similar companies, but we are very focused on one sector compared to the sector that's cardiac. So I don't see it's an issue. I think it's actually a positive thing. GE clearly interested in this space, clearly supportive of AI-based businesses, clearly looking at how they can include as much AI on their machines as possible. And I think our partnership sort of supports that, and we continue to have a really close relationship with GE. And I think the more activity in this space supports that this is a big potential area of business in the future as it grows. It supports the fact that OEMs are interested in companies that are independent software vendors. And I think generally it's a positive thing that's happened with Caption Health. I think that is all the questions.
Great, David, Helen, Stuart, thank you very much indeed for your time this afternoon. I know that investor feedback will be particularly important to you both, and I will shortly direct those on the call to give you their thoughts and expectations. But before doing so, I wondered if I may, Stuart, just come back to you for a few closing comments, and I'll redirect investors for their feedback.
Okay, thank you. Yeah, I think how would I finish? Like, we've got 3 AI products that are regulatory approved, on sale in the UK and the US. We've had a positive start to the year, H1. We're on target to meet our expectations, and we remain excited that we're in the right place at the right time in this new and dynamic medical AI imaging market. And I look forward to talking to you again in 6 months' time.
That's great, Stuart. Helen, thank you once again for your time. Could I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This may take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Intelligent Ultrasound PLC, we'd like to thank you for attending today's presentation. Good afternoon to you all.